Okay. I just tried it again and it worked. Hopefully that worked. Should be live on the VTF and on YouTube. If anybody's able to check the YouTube for me, I'd appreciate it. Last time I was on this computer, I had no sound, but I think I figured it out. So if anyone's able to tell me, I would appreciate it. I'll start with the disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer. Thank you, Varun. Broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I'm out of BYON long. I'm out of S long. Got into and out of open short today. Only new thing, I bought some Joby puts, some kind of lotto puts that Josh stuck in. Which I think could still work, actually. They expire this week. I really think that they could still work. Alright. Quite a day. Every day has been quite a day. We closed green. SPYs here are up 0.2% or so. Qs are up 0.5% or so. The IWM did close negative. It's a relative weakness. It's another day of Qs up 0.5%, IWM negative. These have been flip-flopping back and forth seemingly every day recently. RSP was nicely negative, down 0.5%. So another day where, to one degree or another, it was about Mag 7 holding the market up, though I felt it wasn't as much the semiconductors this time around. It was more of our traditional Mag 7 stocks helped to hold us up. That was in the face of TLT being up a lot on the day, though I see it closed on lows. TLT was up a lot on the day, and that was interesting because in the morning meeting today we were trying to figure out if that was bullish or not. On the surface of it, it should be, right? One of the concerns that people seem to have about this market right now, one of the potential black swans, if you want to call it that, it's not a black swan if you can see it, maybe gray swan, is interest rates rising too far, too fast, right? So big green day today on the TLT, even though it did close on lows, helps to assuage that concern. But the other question was like, sometimes bonds can be hard to read a little bit on what their meaning is for the rest of the market, because the flip side is a big up move for TLT sometimes is a flight to safety. Sometimes it's a fear trade in and of itself. So is the TLT higher today bullish for equity markets because it's relieving fear of higher interest rates? Or is TLT up as much as it was today potentially not bullish for markets because it was indicating more of a fear trade? And the only reason why I even thought that maybe it was indicating a fear trade was because gold was up so much. Gold was up 1.5%. So if I got gold moving higher significantly and I've got treasuries moving higher significantly, that looks a little bit more like a fear trade. And then that makes the TLT being green as much as it is a little bit more questionable for its impact on the equity market. With that said, though, the dollar was nicely down. The ZUP is still not breaking above the 27.50 level that we've been looking at. A weak dollar is bullish for the equity market, bullish for crypto. So dollar down this morning, and yet crypto is also down small and is actually applying a little bit of pressure onto its daily 8 EMA. So that's kind of our market summary, I guess. So the other thing that we discussed in the morning meeting today, which I thought was a pretty cool concept, so I'm going to pull it back up. I just loved, I loved this like line here in the beginning of Pat's note. I try to strike a healthy balance between characterizing the equity market as a place where rational, carbon-based individuals meet to determine fair value for stakes in corporate America, and something akin to the opening scene in Terminator 2, where hopelessly disadvantaged humans fight a losing war against hordes of machines armed with vastly superior firepower. And I love this because it is so true, right? Like, this market has become such a balancing act between what are the human beings doing? What is retail doing? What are the discretionary hedge funds doing? And what are the robots doing? What are the systematics doing? And the thing about the systematics is that they're very measurable, sometimes even ahead of the fact. We tend to know when vol control is going to be buying and selling, when the CTA trend followers are going to be buying and selling. We tend to be able to have a general idea of those things ahead of time. And today, by the way, was another big day for the vol control bid. It was expected to be something like $10 billion or so, and that was just eyeballing that chart that we looked at pre-market. I think it was actually a little bit more than that. So another really big day on the bid side for the systematic community. And that has just been incredibly absorbing for any down negative headlines, right? Anything that's negative that could come out, whether it's Jerome Powell or it's Iran and Israel or, whatever, take your pick. This market just doesn't go down on anything. I asked myself very early this morning, is there any chance that the market could go down today just because it was like the day after OPEX? And I just looked at the daily chart for the SPYs. I just looked at it real quick and I was like, well, how many down days have we even had since basically the market bottomed, or I would say actually since basically this pivot low here on April 21st? And we've been having like 1 to 2 a month. There's been nothing. This month here in July, let's have a look. Well, what have we had? All right, maybe we had a little bit of a down day here on July 7th. That was the day after the half day of July 3rd when the market was extremely upside extended. We had a little bit of a down day. Do we even want to argue that this was a down day on July 15th? We gapped up and failed, but we didn't go down. We didn't go below the 80 MA. It was hardly a down day, but maybe we'll give it to them. We'll give it to them. So 2 down days maybe so far for July. Like, what about in June here? Do we have any real down days in June? Kind of this one day here on July 20th. Kind of this one day here on like July 5th. Maybe you could argue that a couple of these consolidation days were down days, but they're. I mean, I'm looking for like a real down day here. Like, if you're short, you're making money no matter kind of what you were in. Even if you go back to May, you had like this one little like couple day pullback here on May 21st, and that was it. There have been no down days, and believe me, there's been plenty of negative headlines over the course of this 3 months. Yet the market cannot go down because that systematic bid has been so strong. More recently, I've been describing systematic positioning, and I think market positioning as a whole, as a little bit more balanced, where there is now more risk to the downside, but there is more buying that can still be done. It looks like the systematic community could continue to buy for about another month, actually, before they're really hitting that point where they're then like fully loaded. But there is risk to the downside now if we were to break down. So with where the market is, if you want to analyze kind of market dynamics in conjunction with technical analysis, the trend is your friend, and the trend is fully intact. We are moving higher, we are grinding higher, and while the trend is intact, the systematic bid will also be intact. So assume the status quo will continue to be the status quo until it shows you that it's not. With that said, because so much buying has now been done by the systematic community and by funds, because positioning has gotten a lot more neutral, arguably maybe a little bit frothy in certain areas, there is now increasing risk to the downside. If the market can actually go down, it could feed on itself. But that's an if-then statement. So assume that the picture that you're looking at of up and to the right is going to continue to be that way. But if, for some reason, it's not, then it could actually get a lot bigger than people might expect, a lot faster than people might expect. But where does that really begin to trigger, right? We need some bigger realized volatility days to get vol control to stop buying as big as they are. And last I saw, the CTA trend community would not become a seller until like, and maybe I'll get an update on this tomorrow. I bet the number's now a little bit higher. But the CTA trend following community, last I saw, they're not a seller until you get below 6,003. And that's basically getting below the January 24th low, which is interesting because June 24th low. If you ever got below the June 24th low, the technicals in this market would start looking very bearish as well. And again, that's how feedback cycles change over time. That's how a feedback cycle of buying can become a feedback cycle of selling. The technicals break, pivots break. 6,003, basically the June 24th low. That number, Rock, just so you know, is about a week old now, so we might get an updated number on that tomorrow. So I would expect that number tends to creep up with the market, so most likely it's actually a little bit higher than that now. So we'll see if we get an update tomorrow. But last I saw it was 6,003. So again, markets work in feedback cycles. Right now, that feedback cycle is to the upside, but that's how it could change, is if realized volatility increased, if the VIX were to bounce, if some of these pivot lows were able to break, then you could go from a market where we joke around about how this is a buy the blip market, not even a buy the dip market. Who can buy the blip the fastest is the winner in this environment, because like I just pointed out, we've barely been having more than a single down day a month. But at some point that will change. At some point we will have more than just a single down day, and eventually, if you break certain levels, you could go into a feedback cycle of more selling. But you can't call for that here necessarily. I do think that today's little upside tail on the SPYs is notable, but you got to get below, just as a starting point, you got to get below the last levels that we just broke out from, which is basically 627. And then as a secondary point, you got some support that's at 618 in the SPYs. This pivot low here from July 16th is the next spot, and the 21 EMA has confirmed that. If you get below that low, the market's still not bearish. The market goes from bullish to neutral at that point. And it's really, again, only below the June 24th low as of right now that we would go from bullish to full-on bearish. But, we'll see if the if-then catalyst can occur. So with that's kind of the machine side. The other side of things I thought was particularly interesting that we saw some data on this morning, which maybe was beginning to impact like a TLT or an IWM or a GLD, was we saw some like an uptick. And I want to start looking at this more, the Truflation data that Pat gets posted in the VTF. I think it's reported once a week, but I think the reason why it's important to look at that is because it's extremely correlated to what the CPI becomes, but it's much more forward-looking on it. I think a 0.97 correlation to what CPI ends up being, but it's a weekly number. And now for 2 weeks in a row, we've seen pretty big upticks on that. But then there was a follow-on note this morning, and this is the big stuff that I've been paying attention to, right? Like the big question that's been in my mind, honestly, for months has just been impact of tariffs on inflation, on growth, and not just impact, but timing of impact. And that, you can listen to what the Fed themselves have been saying. Timing of impact on tariffs, they've been saying it for months, is the most difficult thing to judge. So seeing that note this morning that I read out loud in the morning meeting that showed that finally Walmart is beginning to increase prices. Originally on their last earnings report conference call, they said that they were going to probably begin to increase prices at the end of May. Maybe they were just trying to position themselves. Maybe they were just trying to apply pressure on the administration. I don't know. Because what it sounds like practically is only very recently in the last week or so, based on that note we read, did Walmart begin to increase prices. And that note said that for some of their products, it had to increase it by as much as 50%, which that seems like a very large number to me. But I guess that might coincide with where some of the tariff levels have gone to. So it was that note combined with that note on it was within the same note where they talked about NVIDIA. I think that this attributed to some of NVIDIA's weakness today. That if everyone remembers, NVIDIA had this great gap up here on July 15th because we basically have agreed to allow NVIDIA to begin to sell, I think they're called H20 chips, the chips that are specific to being able to sell to China. We're basically going to allow them to sell those to China again, and that's great for NVIDIA. that's objectively great for NVIDIA, right? This is something that Jensen Huang has been yelling from the rafters about, and I have been echoing what he's been saying. His thought process is my thought process, where all you do when you, and I get it, like the one thing that I think it makes sense to have tariffs is for national security. But when you're looking at semiconductors, if we're not selling them the semiconductors, they're just going to end up making their own semiconductors. And I know that their technology is not as good as our technology yet, but I promise it's going to catch up, and it's going to catch up very, very quickly. That just seems to be increasingly what's ongoing from a China perspective on the technology front. I'm of the personal belief that at a certain point in the future, let's say within the next 5 years, I think that China is going to end up surpassing the United States on the technology front. And that's regardless of us withholding chips or not withholding chips or whatever. That's just my personal thought process. It's one of the things that has me one of several things has me big picture bullish on China. But that note said that, like, all right, just because now we're allowing them to begin to sell these H20 chips again, there's actually been a ton of just disruption in their production because there's been so much on again and off again about this uncertainty, that just because we're allowing them to do it, they're not going to be able to do it for quite some time. And I think that helped to attribute to some of NVIDIA's weakness. So, you know, the bottom line is, and you've read this from other analysts that I think is great, it's almost like a tale of two markets right now. You have the AI bull market, and you've got like the macro market that just, the macroeconomic environment that just has so much more uncertainties and so much of a bearish taint to it. And the big question has been, is there a time where the that macro environment, those macro negatives that are coming from everything that's ongoing, can overwhelm this AI type of bubble? And you've seen that on a lot of days when you just compare like the equal-weighted S&P versus the, you know, the NASDAQ, which is heavily weighted towards Mag 7 and AI and NVIDIA and Avago and those types of stocks. But, you know, it's just something to pay attention to in the background, because you still have to circle back to where and when is the catalyst that actually begins to break us lower. Is it going to be, and there's a bunch that are on the near-term horizon that we need to keep an eye out for as well. One is August 1st, right? The new deadline of the latest pause on the trade war is August 1st. August 1st is less than 2 weeks away. And the market seems to be fully pricing in that the taco trade is going to continue on August 1st. That he will once again back out, postpone, whatever. And that's something that I actually disagree with. Like, maybe we get some deals done by August 1st, but it's less than 2 weeks away. And I actually think that we're hitting the point where, especially with the market at highs, which can embolden some of these policy decisions, that he's actually going to, you know, try to punish people to push them to get those deals actually done. But that could be a catalyst that impacts the market on August 1st. And then you've got an important employment number in the beginning of August for July, that non-farm payrolls number, which I think the employment numbers right now are also becoming increasingly important, because that's the knock-on effect of tariffs as well, right? The base effect of tariffs is just higher prices. The knock-off effect is that companies are going to absorb some of it themselves, want to maintain their margins, and start to fire people. So we also want to see if that begins to slip into the data at a certain point as well, and then that just becomes combined with a more seasonally bearish period of time. So, you know, this market's just really interesting with everything that's ongoing. I think that I rambled a little bit, and that the bottom line is what I was saying earlier. The trend is your friend. The trend is still higher. The systematic bid is your friend. The systematic bid is still buying. You should know how and when and where that could potentially break. Be aware of those if-then statements that could break this market lower. But for now, the trend is your friend, and you just want to continue to follow that. But I'm not interested in any new, like, bigger picture longs here. But I'm not afraid to take a smaller picture long on a breakout in something that's acting relatively strong, like a Google. Like Google, phenomenal here. Broke out through 180, gave like a 4-day consolidation above 180, another little bull flag. Broke out of that a little bit further on Friday, get further continuation today. Like some of these names are still running, and you shouldn't be afraid to take little trades in those. Or if you are worried about the macro, because you don't want to chase here with everything I just talked about as we're going into, again, a more bearishly seasonal period of time, there are some of these stocks out there right now that are just going absolutely and utterly buck wild. And I'll bring up one other thing from Pat's note, just because I thought it was just I thought it was hysterical this morning. I was reading Pat's note, and I get to this chart. And it says, a basket of stocks with the highest net call volumes in the previous week has again outperformed sharply, indicating rising risk appetite and momentum-driven buying. And in my head, I said, no, I'm not sure if I'm allowed to say that word, right? No S word, right? Yeah, of course. If you're watching this market, you know what's going on. And then when I scroll down to the next chart on this, I literally burst out laughing. Stocks in this basket have poor profitability and are very volatile. It's like, yes, they are. They have poor profitability and they're very volatile. Which, by the way, when you turn back to this market, it's another indicator that we're in the late cycle, right? When you start seeing these pre-revenue companies that don't make any money and start going up hundreds of % at a time, that has very consistently been a thing to take note of, that you're getting near the end of a cycle. It, in some ways, like sentiment, which is the other major thing that I would point to right now that's just getting way too frothy, that indicates that we need to potentially come down. Both seeing short squeezes everywhere you look and sentiment getting frothy are not like timing indicators. They're things to take notice of that you're getting late cycle. And that's pretty much where we're at. And what I would say is, if you're nervous about the big picture like I was talking about, you got plenty of stuff to focus on. That is these, crazy stocks that we're looking at and trading every day. My best day trade of the day, I didn't swing any, was this open to the short side. It just worked, phenomenally well when it actually finally broke. And it was cool to see one actually break intraday, right? I mentioned this last week, and I think that getting past OPEX enabled like QS to actually break down. But I mentioned it like late last week. I was like, does anyone remember like when these crazy stocks, when they break, how they break? Because they tend to break very, very hard, very, very fast. You just get that like swoosh of downside selling that just comes so incredibly fast to the downside. Like, you thought the up move was fast? Wait till you see what the down move looks like when some of these things actually break. And then lo and behold, you had that with QS this morning, even starting pre-market. When this thing opened, look at these first 4 or 5 minute bars of the day. And this thing went from $14 to $11.70. It's a huge percentage move in 4-5 minute bars. Now, with that said, the stock went from $7 to $15, over 100% move, basically straight up green every single day. 1, 2, 3, 4, 5, 6, 7, 8, 9 green days in a row. Guys, this is a pre-revenue company. They have earnings on Wednesday. We'll see what that report looks like. But this thing went up 20% on July 17th, and they primarily attributed that to what's this? I'm blanking on the name. The electric car company that had the news with Uber, Lucid. They primarily attributed that to Lucid, but Lucid doesn't even do business with QS. There's just chatter that maybe one day, somehow, somewhere, their businesses have symmetries where maybe they would do business together. But QS went up basically almost more than Lucid did on the Lucid news, at least if you think about it in terms of like follow through after the fact. So some of these names are just getting absolutely insane. And, you got to make sure that you manage them properly, but you can make money on both sides of these trades. You got to make sure you get the risk managed properly. And I started shorting this Lucid pretty early, but in a very small way. It's kind of how I've been doing it. I've been starting them really small. I think I started it on this day, on the 15th, real small. But I'm already greening it just from today's price action. Even though it's above where I started shorting it, I'm already very nicely greening it from the down move. Or JOBY, right? This is just another one that's just been going. There's so many of these. I'm starting to run space now. They were running open today, right? Which turned into a big day trade for a lot of us. I've had a small position. I don't like this one as much, but I've had a small position in this quad U that I'm still managing. At a certain point, there was opportunities in SoFi that were getting similar. On top of that, what I've been noting, because I think that this is interesting as well, is that a lot of charts that were in uptrends are beginning to, and these are also in some of these crazier stocks like Robinhood, and we called out for a Robinhood short in the morning meeting today. A lot of these stocks that were already in really strong uptrends are actually breaking out of their uptrends to the upside. That is the definition of a parabolic move, right? A parabolic move means the greater the price, the greater the demand. What that turns into from a charting perspective means that as time goes by, the slope of the movement higher increases. That is something that is, by definition, unsustainable. Now, it can sustain itself for quite some time. Just go look at tulips in Holland in, was it the 1500s? Somebody remind me. But it can last for a very, very long time. But when you begin to see uptrends break up, like Sami Abu Saad, my buddy Sami Abu Saad, he gives a great piece of advice that I'm happy to repeat. He says, don't short 45-degree angle uptrends. That 45-degree angle upside grind uptrend, don't short that. Don't short that. Because those just kind of tend to sometimes just continue like seemingly just forever and always. So when do you want to short something that's in a 45-degree angle uptrend? You want to short it because it's breaking the 45-degree angle, like the lower band of the trend line, basically, to the downside. Or you want to consider to start to look short it if it breaks that 45-degree angle trend to the upside. Because when it does that, it's starting to go into a move that, by definition, cannot last. And, in fact, one of my favorite patterns for trends to end is when you get that 45-degree angle break to the upside, the upward band of the channel breaks higher. Eventually what that a lot of times leads to is actually the lower band of the channel failing. Because you break up, you get that parabolic move, you sucker in some of those last longs, you squeeze out those last shorts that just could not hold through the pain any longer, and then that just leads to it falling on itself, it collapsing under the weight of its own delta to kind of steal a line from our buddy Charlie McElligott. So we started to see that happen last week as well. We started to see that with Robinhood. We called out the short on Friday in Robinhood. Called out the short again today in Robinhood. We started to see that in coin a little bit. Called out the short in coin on Friday. Called out the short again today. You started to see that in ARK began to do that. You're starting to see that in Roblox beginning to do that. And Roblox gave an upside doji on that as well today. So, again, look, these are all things that I'm noting. But this can last, right? It's like I said earlier. These are end-of-cycle things to note. They typically are. Sentiment, and when these stocks are breaking out of their trends to the upside and getting just so obscenely far away from their fundamentals. That tends to be late cycle stuff, but they're not timing mechanisms in and of themselves, right? We need to use our technical analysis to try to find those spots where we can short that execution setup to be able to put that trade on when we're seeing those bigger picture things occur. And then maybe, just maybe, at a certain point, it actually leads to a market that breaks as well. But that circles back to the original kind of if-then statements that I was saying at the beginning. So I think that pretty much covers all that I've got. Just another really interesting trading session. Today was also the first trading day 1637 was the Tulip Frenzy. Thank you. It was the peak. 1637, 1600s. What made today also particularly interesting is that first day after OPEX, so sometimes that loosens the market up a little bit, and that can happen in both directions, right? In February, when there was no one left to buy, that was the beginning of the end for the market. In June, when we got to OPEX, we had all the bad news pre-OPEX, all the good news after OPEX, and we were moving higher. We were moving higher on bad things ending than we ever went down on the bad things to begin with, which was also just so crazy. But yeah, that's all that I got. I'm happy to answer any questions anybody has. Not seeing anything in the VTF yet, so I'll pop over to the YouTube. Thanks, Varun. Thanks, Godchild. From Lord Val Miklatov. How did you know about Open? You called to go heavier on it just before it crashed. Sure. So open. Let's pull up the 5-minute chart. So I started a feeler short, like a small feeler short in Open in here, in this pattern, because I saw this little lower high come in right here at 120. Wasn't convinced that was going to actually end the uptrend, so I just started as a small feeler short. Like, if it broke down, I'll make a few dollars, fine. If it breaks up, I'm not going to stop myself out because I'm light enough that this is a filler position and I want to watch it and I want to manage it. And then it moved higher, got a little bit heavier, and then what I wanted it to do is I wanted it to accelerate up, actually, for me as a signal to really get more size in it. And it started to do that a little bit here into 2 o'clock, but then it gave me a pause candle at 2 that I didn't love, but it might have just been market related, and then it kind of continued into 205. I had an offer at $9.45 to size up a little bit into a more parabolic up move into this 5, so I wanted to watch it into that 5, and then it upticked here again. This is where I called out that I was sizing up. It upticked here again at 235. It made a new high by a penny. This high was 93 cents. Now I made a new high on the day by 94 cents. And I'm making one more new high at 97 cents. But it just, there was so much liquidity on the tape offered at 5, and it seemed to me like the name was stalling out a little bit, that I said, like, all right, I'm sizing up in this. So instead of just leaving offers out passively, I started hitting the bid. I started hitting the bid at like $4.88 or so, and then the thing crashed. So it was combination. Let me be completely honest. Of seeing a couple things and then getting a little lucky. Like I didn't know when I was putting that on that it was immediately. I thought it could go down, but I didn't know that it was almost immediately going to have a big crash that leads to a halt, that leads to a gap down. The stock went from $5 to $3 in 15 minutes. I couldn't have predicted that speed. With that said, though, when these names do break, this is what I was saying at the end of last week, when they do break, they tend to break very, very hard and very, very fast, as everybody is absolutely running to the exits at the exact same time, right? That's what we saw at QS at the open today, and when open did go, that's what happened as well. So that was pretty much it. And then when it gapped down and reopened here in front of 3, my target on it had only been 3/4, so I just marketed it out of the position because it gapped down to below where I was gonna liquidate, and you can see that here. That's me just marketing out of what I had left. Then I reshorted a little bit into this 80 MA on the 5-minute, and then I covered all that on the way down again, and then I just decided to be done with it because we run out of time on the day. So turned into being a pretty good trade. I hope that helps a little bit. Cyril saying IWM weaker, notable, it went below the OPEX expiry close. Yes, IWM weaker, RSP weaker. It is all about Mag 7 today, and interestingly enough, NVIDIA did not participate as much today. From Scott, for me, QS short today, open door tech long swing exit today. All right, great job. from Apex Joy, what do you think of QS downside target? How you think of this bearish signal on QS first day after OPEX? So my target for my larger size on the trade was the 80 MA on the daily. So I'm out of like 3/4 of my position. I had a very, very big position. So 1/4 left is actually still a pretty big position. But I had a really big position on this thing at a certain point. So, you know, main target on my size was just the 80 MA on the daily. It did that. It did that today. And look at that. It did it to the penny. It did it to the penny. Usually when these names break, though, they break deeper than the 80 MA on the daily. Usually, like, a much better target for these, I think, is like the midpoint between the 8 and 21 EMA. And if you want to be aggressive, all the way down to the 21 EMA. So I think like an aggressive target is basically $9. That'll continue to rise, but that's where the 21 is right now. Or I think a very fair target is the midpoint. So I don't know, something like a little bit above $10, $10.25, something like that. I will continue to size down on the way down on that. And then, you know, some similar idea with what I'm looking for on Joby. Joby looks like it closed on lows, continue to trade a little bit lower here after hours. This thing looks like it wants to give that move as well. Actually, just got filled on the bid right now as we're chatting. So, you know, first big target is this 80 MA on the daily chart, but I think it's very reasonable to look for at least a midpoint between the 8 and 21 EMA on the daily chart for JLBY. So I hope that helps. From Cyril, today QS touched the ascending tops line from November 21 to November 25. Oh, the Qs, I think you mean, not the QS. I know the chart that you're talking about because I've seen other people post it. I know exactly what you're talking about. Like this, this like line, you know, that goes all the way up. I know exactly what you're talking about. So yeah, we accelerated all the way back to the upper band of the trend line that we've been in basically since COVID. So that's also further bigger picture resistance technically. For Scott, I'm building a long position UPS. We will see. It may still be early. I like between 90 and 100 to accumulate. Yeah, I don't like to trade UPS. I've always struggled with that stock. I think if you're going to... I will circle back to what I said earlier about the market. I don't like new big picture longs right now, but if I was going to be doing a bigger picture long, I would want to be doing it in any name where I perceive that there is a cheap valuation. I have no idea what the fundamentals of UPS looks like, to be totally honest, because it's not really a stock that I look at. But, you know, maybe some of those oil names can hold up a little bit better as an example. That has been what I've been looking at. Healthcare, dare I say, some of these healthcare names. What's the health? Why can't I remember the healthcare ETF? I'm blanking on it. But some of those healthcare names are there's value there somewhere if you parse through them for sure. Looking at Hood short, I think you should already be it. I think you should already be short Hood if you want to be short Hood. I think there was an opportunity to short it on Friday, and there was a further opportunity to short it today. And if you're shorting it right now, you're almost shorting it into the rising 80 MA on the daily chart that it has held since May. I think it's going to break it. I think it's actually going to go lower. I think seeing $100 in Hood is very reasonable. It's like I said before, one of the best ways to break the lower band of a ascending channel is to first break the upper band of the ascending channel. XLV, thank you, Apex Joy. And that's kind of what we had. So I do think that this Hood could go a good bit lower, but I just think that shorting it into the rising 80 MA on the daily is a very tricky execution. I'd like you to already be short that. Bobby would not short anything right now. Okay. XLV. I think that there's some spots within this XLV, if you do some research, where you can find some value. Tends to not be a sector that I really focus on. Back over to the VTF from Liam. What do you make of SPY actually breaking down on an intraday double top versus the Qs remaining relatively strong? The Qs technically broke the double top, but didn't sell as much as the SPY. Yeah, I mean, the Qs are what's holding the market up, right? The IWM was weak, the RSP was weak. The SPY is going to tend to be, it tends to trade somewhere in the middle of the IWM and the Qs. So on the one hand, it seems like the SPYs are always kind of strong, because either the Qs are up or the IWM is up, so therefore the SPYs are benefiting from whatever's better. But it kind of always seems to be what's in the middle. And you could definitely make an argument that like that you potentially have a breadth issue on a day like today as well. That could be a weaker signal for this market also. Yeah, I see your double top. You know, high, low, high. So you have a little bit of a M pattern here. Here they broke that low and fulfilled it to the downside. Qs didn't as much, but that's just relative strength for you. For me, like, correct me if I'm wrong, but were the semis the main sector that primarily led to this move? Yes. The answer is yes. Would you say the leading sector's weakness can give us some good context that we can actually see some market correction? Not necessarily. Not necessarily. Lastly, I wanted to ask, when the leaders start to show weakness, would you want to look to short the names that have had those massive run-ups, or names that haven't been able to catch a bid and are more relatively weak? That's a great question that I've been trying to figure out the answer to for a very long time. But I'll start with a little more detail, I guess, on the other question. Would you say that using leading sector weakness can give us some good context so we could actually see some market correction? That, from my experience, is very, very situationally dependent. Sometimes the answer is yes, and sometimes the answer is no. Sometimes the answer is no because the leaders take a break and everything else catches up. Leaders just got a little ahead of themselves. They take a break. We perceive it as weakness, but everything else catches up. That's a healthy market, and that does not indicate that the market's going to correct. Sometimes it's more in the direction of what your question is leading towards. Sometimes it's like nothing is participating, breadth is poor, it's just these few names that are going, the few names stop, and then everything else begins its decline. That happens sometimes too. So I think it's a little situationally dependent. In this situation, I would lean towards my personal thought process that if we lose the leading sectors, then we lose the market. Because it's like I said earlier, it's a tale of two markets. It's AI and it's macroeconomics. The macroeconomics is fraught with issues and problems and difficulties. AI is the future. AI is efficiency. AI is where the spend is. You lose AI, then all you have left is that macro uncertainty. So in this situation, I'd be inclined to think that if we can really lose Mag 7, if we can really lose the semiconductors, then we also can potentially lose the market. And then the other part of that question, I've never been able to find a good consistent answer to. You know, basically, like, do you short like the names that were strongest are usually most extended, so it looks like they have the best reward profiles, but they were the strongest. And the names that were the weakest, well, they're relatively weak, so they could give you a big bang for your buck on the relative weakness, but there's not like as much technical target follow through on them because they, you know, we're already down there. That's tough, right? So I kind of think that the most profitability in some ways is somewhere in between. It's actually the crappy stocks that have gone up a lot, not necessarily the good stocks that have gone up a lot. Not like, I think that NVIDIA is due for a bigger pullback. You know, we saw that Goldman Sachs note at the end of last week that described NVIDIA's positioning as a 10 out of 10 right now to the long side. There's also that chart I keep mentioning that I've seen that shows the rally in semiconductors from the April low is the biggest rally that semiconductors have ever had in one go by a large degree, at this point surpassing the COVID bounce off lows by 20%. It's just massive. So I definitely think that NVIDIA could have a big pullback just from a positioning perspective, especially if you know, that H20 stuff is going to take time to build out. But in some ways, NVIDIA is still a phenomenal company. And I don't think that NVIDIA actually trades that expensive, especially compared to like Tesla. So what I would rather be short is, you know, the names that have good reward profiles, but also I just don't think that they're as good of companies, or they're trading at extremely expensive prices. So I'd rather short a Tesla. Maybe even at a certain point if we're to break a Palantir, but Palantir is probably not a great example. But honestly, the Jobies and the QSs are what I would rather be short as well. So hope that helps. From Tanner, I'm working on developing a parabolic short strategy. What are the biggest factors that made you take QS short? Was it mainly the consolidation and fail at 15? So again, I already was short a smaller position in this QS, starting at like, I don't know, like 1050 or something like that, and then have been slowly adding on the way up, and then I got more aggressive as the thing has started to go parabolic, and more aggressive in certain areas in that kind of, you know, $15 area. So there's a couple ways that that you can look at these trades and the way that they end. One example is when they end with like a real bang at the top, and I don't actually have a great example of that. The best example I have of that, and it wasn't even the top for the stock, is an open today on the 1135 candle. So it just ends with a bang, right? Like, I think I said this late last week once as well, like almost kind of comparing it to the death of a star. You know, when these stocks go parabolic, they kind of sometimes end with a bang, and they kind of sometimes end with a whimper. Like, they sometimes end where they just start going so crazy on every time frame when the volume is increasing, and it's extended on the 5-minute and the 15-minute and the daily chart, and it's like day 10, and you know, the 5-minute starts really ramping up and volume increases. That's a little bit, the best example I have of that just in front of me. It's not ideal. It's kind of like what happened at 1135. Like, the thing just is breaking out, extending higher, and then just look at all the volume on the 1135 candle. More ideally, it'd be a shooting star candle. More ideally, it would be even more extended. More ideally, it would have been an additional day of the daily chart. But that's the best I've got. Other times, it's like they kind of end as a whimper. Like, we're paying attention to the support levels. That was the big thing that I was doing with in communicating like QS and Joby for downside. Is like, where are the levels that these things really need to break? And for this JOBY, it was like the 1370 area. That was like the for QS, it was like the 1370 area. That was the big spot that I was looking at for this thing to break down to begin to trigger it. And I was looking at that like 1350 to 1370 on Friday, and then pre-market, I just pulled up the pre-market chart. It was holding that again as well. So if you go back to the daily chart, 2 trading sessions ago where I went nuts, it was up 20% on the day. The high of the day there is 1379. So that was a potential RDR for Friday if it triggered. It never really triggered it. It triggered it super quick at the open on Friday, but it never really triggered it. So like that 1370 area. And then on Friday, it was kind of holding that as some support, like 1350 to like 1380, that spot. It's kind of holding that as some support. And then pre-market this morning, right away it was acting relatively weak, so I made note of that. And then pre-market, look at this. Like, there were 3 perfect holds to the penny of 1370. It's the exact same spot. It's the exact same spot. So that was the level that I mentioned in the morning meeting. That was the level that I wrote down on my little, you know, note there. And then this thing just opened up, it plowed through 1370, and it was just complete and utter destruction. JOBY, I haven't been able to get this darn thing to break. Its level that I've been looking at has been more like 1730 to 1750. That's been the zone for this thing. And you can see it tried to hold it here on Friday. And then today it was, again, kind of holding that pre-market. I'm not going to bother pulling the pre-market chart up, just trust me. But that, you know, 1730 to 1750 roughly. And then all of a sudden, look at this. This one's ending with a whimper. All of a sudden, this thing finally began to lose some support in the last hour and a half of the day. And now I'm getting filled on the bid at 1630 as we're having this conversation. you know, dropping another 50 cents after, kind of just rolling out as a little bit of a whimper. So those are kind of the two ways in which I find that those things tend to end. But, you know, you really want, and this is the big thing, people ask me in the morning meeting and afternoon meeting all the time, and it's fine. Please continue to ask every question that you guys can think of. Like, I don't want to pick on Paul because Paul's the man, but you know, Paul brought up a name that was breaking out on the daily chart that was a day one. I don't know if he's listening or if anybody remembers the symbol. And Pat and I both responded at the same time through text in the VTF, and we both said coincidentally at the same time. Basically, Pat and I said the exact same answer, which is like, oh hey, it's a day one. It's just too early. Like maybe tomorrow, the day after tomorrow, this one then kind of becomes on the radar. Like a real prerequisite for me to look at these things I got two, I would say, main prerequisites for me to look at these things on the other side when they begin to go crazy. One is I need this to have been at least 2 or 3 days. At least 2 or 3 days. In this case, QS, and this just shows you how stocks can keep going. Sometimes 2 days is not enough days, so don't just blindly short them. Wait for a signal, short the RDR, short on the way down, or if you're going to start blindly shorting it, do it very, very, very small, like I usually do, with like a little bit of a build-in process. But this QS went 1, 2, 3, 4, 5, 6, 7, 8, 9 days from this breakout. Insane. I need this to be at least like on day 3 to consider looking for a signal to short. And that's one. And then 2 is I need an appropriate float. If I don't know the name very well, the first thing I'm doing when I'm looking at the stock going crazy is I'm looking at the float. A-Lab, thank you, that was it. A-Lab. I'm not shorting this A-Lab. I'm not shorting it. Just not shorting it. It's day 1. I don't care what it does. I don't care if it rolls down. I don't care if you could have made money shorting this. I'm not shorting this. Prerequisite number 2 is it's got to have some float. Usually the big float stocks, there's a lot of float. Even if there's a large short float with it, reasonably large, like, you know, not 100% short float, 100% plus like GameStop was, but, you know, even if there's a large short float that's like 10 to 20%, usually the float's too big and they can't overly sustain it, right? So I don't want it to be a recent IPO where the float's all locked up. I don't want to type up the stock in FinViz and see it's got a 5 million share float. None of that's going to work. I want look at these names that I'm shorting. Open. The float in Open is 634 million shares, right? 21% short float, and I'm recognizing that, but it's got 600 plus million shares in the thing. I'm just typing this up on another screen right now. JOBY, 448 million share float. QS, 400 million share float. Perfect. Those all fit the bill. That is what I want. So I hope that helps, Tanner. From Liam, I know we talked about this in the morning regarding pre-market trading and stop orders. Obviously not working. Just curious how you handle managing these positions if you are entering in the pre-market, since sell limits for a long cannot be entered below the current price and be executed immediately. Well, that's what I want. I want it to be executed immediately. That's how I stop myself out. If I'm long a stock pre or post market and I need to get out of it, I don't know. Use Open because I'm flattening it. If I decided to buy Open right now versus $3.20, $3.20 is my stop loss for whatever reason, and I'm long 1,000 shares. What I'm going to do is I'm going to take an offer and I'm going to cross it down to $2.95. And if my stop's supposed to be $3.20 and I'm staring at this thing until my eyes bleed, and then the second I see a print of $3.20, I press the enter button and I cross the market and I'm out. It basically acts as much as possible as a market order. That's just how you have to do it. And you're going to get more slippage because you're trading after hours, right? And it's going to be slower because you're trading after hours. If you're not comfortable with that stuff, don't trade after hours. Most people should not really be trading after hours. And honestly, when I'm doing stuff after hours, most of the time, I don't have a stop loss. I'm trading it without a stop loss, which inherently means I have unlimited risk. So the sizing damn well better be appropriate. But, you know, sometimes I can afford to do things without a stop. If I wanted to buy 100 shares of open right now and have no stop loss and it goes to 0, I'm going to be fine. So sizing is really, really, really key in that circumstance. Hope that helps. All right, gang. I got to wrap it up there. Have a great night, everybody. I'll see you all tomorrow.